Welcome back to EDS, and in this video we're going to look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year without using much of your time. So the first thing we want to do, we've got a chart of Intel up at the moment. We have got a position on Intel. We've got a short put at the 17 strike and a short call at the 25 strike. But let's look for a new position today. So what we want to do is go into our watch list section. You can either build your own watch list or by all means just use some pre-made watch list. It's really not too much of an issue because we are product indifferent, meaning we'll trade anything. Basically, we'll trade anything with high enough volatility and enough liquidity. So what we want to do is we want to see where we are in the cycle, in the option cycle. So if we go over to the trade tab, and we have a look at all the different strikes. So the strikes with a orange W means it's a weekly expiration, and then everything else is a monthly expiration. So we want to stay away from the weeklies for the purpose of this example. We want to stay away from the weeklies, and we just want to focus on the monthlies. So the next monthly expiration is September 20th, which is 21 days away. This is when we want to be looking to get out of the position as opposed to getting in. So we're going to go to the next one along, which is October 18th, and that's 49 days away. So the reason why we do this is so we can see how many days we're going to have left on our contracts. So we've got 49 days. We can call it 50. So we go back to our watch list, and then we can filter out all underlyings that have earnings in the next 50 days, right? So we know our contract's going to last for about 49 days, say 50 days. So what we want to do is we want to filter out anything that's going to have earnings within those next 50 days. We do not want to be in a trade when there's earnings going on. It increases volatility, which is not good for us, and it can cause some problems with Delta. So we've got this list up now. And next thing we want to do is we want to order everything from high to low in terms of IV rank. So the highest on the list right now is mRNA. Below that, we've got DJT. We've got Wolf Speed. We've got NVDL, which is a leveraged version of NVIDIA, essentially. Basically, as you can see here, everything kind of in this top section from VST upwards has an IV rank of over 50, right? Which is perfect for us. So let's just go down the list and start with mRNA. Okay, so we go over to the trade tab, October 18th, and now this is the options chain. Okay, so this orange line, horizontal orange line, is where price currently is at, which is 76.23, which is right between 75 and 80. And then this orange bar on the right hand side shows you the expected move of the underlying over the next 49-day period. So what we want to do is we want to have a look at the spread first of all. So as we can see here, 4.6, 4.7, 7.8, 7.95. So, we've got a spread that's kind of, 10, 15 cents wide. It is a little bit wider than what I would like. We ideally want, penny wide spreads, but I guess it's not too bad. It's not the worst thing in the world. So if we were to just have a look at, let's say, a position, and we could go for the 17 delta on this, and then we can go for, say, the 19 delta on that side. So we've got the 65 and 95 strikes, which is a pretty delta neutral trade. We do have we do have two positive deltas though still. We've got a probability of profit of 70% and a probability of hitting 50% profit at some point in the next 49 days of 83 to 85%. And we are going to collect $300 in premium up front. However, it is going to cost about $3,500 in buying power to place this trade. This probably isn't going to be a trade that I would place. I think there are better opportunities out there. It is just the first one on the list. However, let's just assume that we're going to go ahead with this. But let's just say that $3,500 is actually a bit too much for your liking. So what we can do is we can buy. We can go long on some contracts. We can buy some contracts, and we can strategically buy contracts to offset the contracts that we've shorted, right? So for example, we've shorted the 95 call, we can buy the 100 call, right? So if you buy the 100 call, what that's now done is it's limited the loss that we can make on the call side. So now, our max loss is going to be in between 95 and 100, as opposed to anything 95 onwards. The contract that we buy here at 100 is covering our short. So we're going to do the same thing on the put side, and we're going to buy the 60. We're going to buy the 60 strike. So what that's done now is it's actually reduced the amount of buying power that's required. It's reduced the premium we collect, but it's significantly reduced the buying power we require. And if you notice, this trade now is a much higher return on capital trade. However, our probability of profit has reduced slightly, and that is the trade-off. So if you have got a slightly bigger portfolio, mRNA could be a nice strangle for you. If you have got a smaller portfolio, by all means, you could just turn it into an iron condor, which is what we've got here, and that should be able to fit in your portfolio. And essentially, that's the entire process. If mRNA wasn't ideal, we'd just go down the list and we'd look at the next one, DJT. So let's have a look at the 16 delta. We always like to be somewhere between 16 and 20 deltas. We've got the 17 delta on that side. So we've got 13 and 44. Now, obviously, this is to do with Trump. This is Trump's company. And whether you want to be involved in something like that with what's happening in the news, it's nothing to do with politics or your view on politics. However, volatility is going to do what volatility does, and with things being in the news, the position could turn against you very quickly. So whether you want to be involved in something like DJT is something that you're going to have to ask yourself. If it is a concern for you, I'd probably just stay away from it. But we can have a look at the chart. I guess, as you can see, it's kind of just been taking the stairs down recently. IV rank has been steadily increasing though. I guess right now wouldn't be a bad place to put a trade on. So if we look here, 13 and 44, what would that actually look like on the graph? So 44 would be there, and 13 would be there, basically. So 13 and 44, there's quite a heavy skew here, but that's fine. We probably won't be putting on a position on DJT, not because of the skew, but because of just with everything that's happening in the news and with politics and the elections and all that kind of stuff. This is a position that I can see turning sour very quickly, regardless of what your original position is. If volatility comes back, or takes if it shoots up, I should say, that can cause problems. So that's basically it. We're just going to go through every single item, every single security in the list, and we're simply just going to look for positions that look good, that look juicy. I know that's not, you can't quantify how juicy does a position look, but you'll develop this sixth sense for it. One last thing on positions, we do have a position sizing template. So all you need to do is enter your portfolio size. Let's say you have a portfolio size of $46,000 and the VIX is at 12.1. Everything will then be automatically calculated for you. Just stick to the guidelines on what's outlined here. It'll tell you how much to allocate to each undefined risk position, how much to allocate to each defined risk position, how much of your portfolio to allocate to short premium in total, and it changes dynamically based on your portfolio size and what the current VIX level is. And of course, there's an explanation here as well, explaining everything. So where can you get a copy of this? You can get a copy of this in the EDS Premium group. In the group, you'll get a full course that will take you from complete beginner to expert. You'll have access to all of our portfolios. You can see what positions we put on as soon as we put them on, so you can emulate our portfolios, so you can learn and earn at the same time. Of course, it is a private community, so you can speak with other traders. You can speak with myself directly. And this is obviously where you can just drop a message and we'll send over the position sizing template to you. There is a 100% money back guarantee. So if you've gone through all the material inside and you followed our trades for 6 months and you haven't seen results, then we'll work with you for free until you do, or you can request a full refund. So it's completely risk-free. It's completely risk-free on your part. And right now it's £1 a month. the price will increase for every 5 people that join. Whatever price you get in at, you're locked in at that price. So if you're getting at £1 a month and the price increases to £1 million a month, you will only ever have to pay £1 a month. So with that being said, I'm looking forward to seeing you all on the inside, and I'll see you there.